Today we have a special guest from Forster's Financial. His name is Sean Hughes. Um, we do this episode every week for estate planning purposes. We are coming from last episode from segregated fund. Today our topic is why people need to have life insurance for estate planning purpose. So welcome, Sean.
Thank you so much for having me, Lucky.
Thank you. So tell me, for our audience, especially Canadian residents, um, what's the purpose? What's the purpose of to buy life insurance for estate planning purpose?
Most definitely. So, I think what people need to do is change the mindset. So, if you think of life insurance as a financial asset, the
Hmm.
key question you need to ask yourself, Lucky, is how can I utilize this financial asset in my overall portfolio?
Okay.
So, there are a number of different topics that insurance advisors can look at. So, insurance as a financial asset can be used to create the estate,
Okay.
it can be used to preserve the estate.
Hmm.
It can be used to pass on wealth, and it's the
Okay.
most cost effective mechanism in which to do so.
Okay.
And it also allows you the mechanism to tax shelter money. So there's a lot of different utilizations that life insurance can be leveraged in your overall portfolio.
That makes sense. So, in a nutshell, some people say like when they die, they're going to pay too much taxes. There's probate fees. So, can you elaborate? There's a lot of cost after death, and people don't realize they need to have some saving or some insurance in order to pay these bills or pay the taxes or pay the probate fees. So, do you come up with any solution that people need to have in this kind of purpose?
Most definitely, I think with any type of financial plan, it's important to have your financial documents in place in which Lucky and his team can help you out from an estate planning standpoint. So that's a will, power of attorney.
Mhm.
When a person passes away, what people don't realize is that you do have to file a tax return. And when you file a tax return, depending on your situation, that can also trigger some additional taxes that unfortunately maybe the estate or the spouse is just not prepared to cover off. You sometimes have to sell assets at a loss just to free up some capital. So insurance is the best mechanism because it does free up tax-free dollars and it's paid out directly to a beneficiary or beneficiaries, depending on the estate plan itself.
Yep.
And like I said, developing a strategy itself to cover off those estate taxes, there are very many cost-effective tools that you can definitely leverage through Lucky and his team.
So, what do you think about having a permanent life insurance to help the financial uh, problem at the time of facing estate? So, I know people have term. Sometimes they run out the term, and they don't have enough money for the estate planning purpose. So, in my experience, I noticed permanent life insurance also help people to realize they should have it for estate planning purpose.
Most definitely. So the nice thing about the insurance business is that there's different strategies for specific needs. And you had mentioned term insurance,
Yes.
and that's an ideal solution if the client has a temporary need. The one thing that we don't know
Hmm.
is that when we're going to pass away.
Exactly. Yep.
Right? So
Yep.
we are living in a society now where people are living a lot longer, and it's nice to have a strategy that's actually going to be in place
Hmm.
at the time that you need it. So with
Okay.
permanent life insurance policies, there are different products available, but ultimately the key benefits are guaranteed premiums,
Hmm.
guaranteed cash values,
Yeah.
guaranteed death benefits,
Hmm.
and you can also structure these permanent strategies so that there are a limited pay. So if you are a younger professional and you
Hmm.
can think out 20 years down the road and look at
Hmm.
retirement,
Okay.
you can put place in strategies now which are very cost effective
Yeah.
so that when you're old like myself, you can stop paying premiums and the strategy is taken care
Old is gold, right? So, anyways,
of.
in a nutshell, tell me if you came from Forster's Financial, so I know you guys have some kind of benefits attached to the product. Can you elaborate the benefits that Forster's Financial provide to the consumers?
Most definitely. So we are very unique in the landscape because we're a member-based life insurance company. So when you provide an insurance strategy through Foresters to any of your clients, those
Hmm.
clients become members. And as you know, membership has its privileges. So with foresters, there's a few things that families can definitely leverage. So when you're talking about estate planning,
Hmm.
we will be launching some new tools that families will be able to leverage to create their own wills
Oh, really?
and
Okay.
create their own power of attorneys, which really is important documents they can put together.
So it's a free of charge when they buy any product from you.
That's exactly correct. So it's going to save money in their pockets, but more importantly, it's going to allow you, the advisor, to work with them
Okay.
to put those important documents in place. So that's from a financial standpoint. Other things that we offer, especially our member benefits, are designed for those young families. We have fantastic scholarship opportunities, and we have two.
Okay.
To give you a quick summary, one is called the Competitive Scholarship.
Hmm.
So we, as an organization, give out 250 scholarships per year. Each scholarship is worth $8,000 in total, and that's
Per child.
payable per child,
Oh, nice.
and
Okay.
that's payable $2,000 per year over 4 years.
Okay.
If there's a death in the family, we also can invoke the Orphan Scholarship,
Hmm.
and there is an amount that's set aside depending on the makeup of the family. But again, that helps supplement and get the youth to post-secondary school. So from a financial standpoint, we're basically offering your clients more than just a great insurance strategy. If I talk about some of the fun stuff, because I always say, why not get a strategy that you can put in place and utilize while you are alive? And that is the key. Why not have fun with that insurance strategy while you're alive? So we give away tickets to a number of different events all across Canada.
Okay.
So if you have families that are looking to spend more quality time with their kids, especially now
Yeah.
with March break, you can take them out, enjoy, and look at all these free opportunities to put money back in your pocket, but again, save. In addition to that, if you are somebody who's really all about giving back to their community,
Hmm.
we are an amazing organization that is all about helping.
Okay.
And helping is who we are. That's our mantra. So we empower every member to do good works in their communities, and we can provide funding to them through the granting program, which is amazing.
Oh, really? Okay. So I know you missed one benefit that really trigger to young families. If two orphan benefit that two parents passed away, can you elaborate that benefit to our audience?
Most definitely. So the key thing with the orphan benefit is that once you become a member,
Hmm.
and if there's two parents, if both parents happen to pass away and the kids are still under the age of 18, that can be a pretty emotional, difficult time for those
It is,
kids.
yeah.
Not only is it emotional, but it's also some financial stress. So you, the insurance advisor, have
Hmm.
already put insurance proceeds in place,
Okay.
which we've paid out.
Okay.
So in addition to the insurance that you would have paid out, what we can do as an organization is offer another layer of financial support for that family. So we can actually pay a legal guardian,
Hmm.
and this is why it's important to have your will and a guardian appointed.
Hmm.
We can pay out to a guardian $900 a month tax free for every child in that household every month up until their age of 18
Oh, really? That's amazing. Okay. Per child
per child. So
for
it's another
$900 per
layer.
month.
That's correct. So it's
Yeah.
another layer of financial support. Now the guardian has all these funds coming into the household, which he or she can then utilize to benefit the kids.
Okay, that makes sense. Though that's not other that comes with a member benefit, right?
That's
Free of
correct.
cost,
That's
right?
correct.
So and also I know you guys have another incentive that very attractive to save money for our consumers, especially for a permanent policy incentive for smoker. You
Hmm.
give 2 years non-smoker rate for smokers. So can you elaborate this benefit to our consumers?
Most definitely. So if you are a consumer and you do smoke, premiums are obviously a lot higher than your traditional non-smoker premiums.
Yeah.
So what we can do to help you in that scenario is if you are looking for a permanent strategy
Hmm.
and you do smoke,
Hmm.
foresters can offer you the discounted non-smoker rate for the first 2 years. And again, that directly puts money into your client's pockets because they automatically will save money. Now, if the client has been very lucky and has been able to quit smoking for a
Within
12-month period, then they can continue paying that
within
discounted rate.
12 or 24 months, they
It's
will
12 months, 12
12
months nicotine free.
negative free. So they will be then it's changed to non-smoke rates throughout the lifetime.
That's correct. So they continue to pay the non-smoker discounted rates. Now, if you have a struggle and can't stop smoking for a 12-month period,
Hmm.
then the contract will actually show the client exactly what he or she needs to pay in year
Hmm.
3. So the client is not caught off guard.
So, statistics shows that people don't have enough life insurance, even in young age or in old age,
Hmm.
and that's why that in our industry, people criticize we are not telling the clients or not advising the client in proper way. So what do you think it's a proper solution, that proper way that we could give enough insurance for our consumers?
So I think it's important that when the broker meets with the potential clients, you do what they call a financial needs analysis
Yes.
tool.
Yeah.
And that actually walks the client through a simple process that outlines exactly how much money needs to be payable in the event of death.
Okay.
And the one key factor is income replacement.
Hmm.
So most families these days, lucky, have to work. So
Yeah,
you have
of
two
course.
incomes in the household.
Hmm.
If one income is no longer there, what happens to that family and the lifestyle?
It's true.
So if you look at it from a simple income replacement standpoint, even $1 million is almost like the bare minimum for families these days
Right now,
because of
yes.
incomes and the size of mortgages.
Mortgages, yeah.
Most definitely. So the industry has definitely changed, but I do encourage people to take advantage of the low cost insurance while you are younger. Buy as much as you possibly can because it is an asset that you can then leverage throughout the course of your life.
So in a nutshell, I'll tell you also on the estate planning purpose, when someone died, right, and if they have investment property and also non-registered investments, even they have a RRSP of say $300,000. Um, if even the spouse not in a life, say the husband passed away earlier and the wife had these things and she passed away and she have to roll over to the kids, it's called deemed disposition on the accounting term.
That's correct.
So example, they have, if this person have 2 million or 3 million as under herself, um, certain things she doesn't need to pay taxes, but certain things she need to pay capital gain taxes. Sometimes RSP is fully taxable.
That's
In
correct.
that sense, people don't have enough money. Um, that's why we encourage, and I think insurance company also have a great product available to give them in a product as permanent life insurance, and they could be implemented on estate planning purpose behind it. And also, briefly, I want to touch on mm, people buy life insurance for charitable purpose
That's
on
correct.
estate planning.
Yes.
Can you briefly describe how it can be worked?
So, in the time of death, when you have a deemed disposition, with a married family, you can typically pass on wealth to the other spouse. It's the challenge is when the second spouse passes away,
Hmm.
and then that family wants to pass on the wealth to their kids, or maybe their grandkids, or even to a charitable
Yeah.
organization, as you
Hmm.
mentioned.
Hmm.
Insurance is the most cost effective way. So, ask yourself so, for pennies on the dollar, if I've worked hard for 40 years of my life and I've accumulated all of these assets, I want to make sure that the full value of these assets are
Hmm.
then passed on to my kids. And the only way I can do that is insuring these assets
Yeah.
through an
Yeah.
insurance
Yeah.
strategy.
Hmm.
Now you were talking about charitable gifting,
Yeah.
and we as Canadians, are very huge in giving back to charities.
Of course. Yeah.
So what we can actually implement as well is you can have an underlying strategy that benefits the charity. But if you do any insurance business with foresters, whether it be on a term insurance strategy or a permanent strategy on the par product,
Okay.
we can actually make a 1% donation of the overall death benefit to a
Top of your
charity
face amount.
on top of the face amount to a charity
Well,
of the
that's
client's
good.
choice, totally free of charge.
Okay.
And that's a huge benefit because what happens is that in the event of death, we would make a donation to the charity of the client's choice. A tax receipt's then payable to the insured estate, and that can help offset any possible taxes that are due.
So roughly, in a mathematical term, I just want to, if it's a $1 million, 1% is $10,000.
That's correct.
So it goes to the charity, and the client will or estate will get a charitable donation receipt to that estate, right?
Most definitely. So the family's taken care of.
Plus, you got the beneficiary will get the $1 million.
Exactly. So the 1 million is paid out to the beneficiary or beneficiary, so the family's taken care of. But at the same time, that client actually leaves a longer legacy for a specific charity of their choice.
So I also want to touch on this aspect. Business owners, like they also consider, they call succession planning. We call it in a personal aspect is estate planning purpose, but succession planning is the right term for the business purpose. So if they are two partners and they want to work together, and then suddenly one partner passed away, they always decide one partner passed away, they have to buy their share because
Hmm.
they cannot work with their family because they don't have the same skill. And there's a life insurance policy available. It's called buy sell agreement. What do you think about? And your company also provide that on this base. Can you briefly elaborate what's this product all about?
Almost definitely. So that's another way in which you can leverage that financial asset through the insurance process. Is what it does is really frees up some tax-free capital so that the surviving spouse's shareholder's spouse
Yeah.
receives the fair market value for the shares of the corporation. And that simply means that the one partner doesn't have to sell assets
Okay.
to free up capital to offset the shares for the
So
other
they don't need to
spouse.
stop their business. They just still operating it, but still they're buying the shares.
Most definitely. So it's something you would take a look at. So you'd say, what is the fair market value of the company right now if I passed away yesterday? And then periodically you'll need to take a look at that fair market value as that corporation continues to grow in value and then update accordingly.
Okay. So what about there's another aspect called key person insurance. So what's the purpose behind that? Why they need to do insurance on the key person?
So the key person is really there to sort of help alleviate, I would say, the financial stress if a key person on your company is happens to pass away. So how do you actually replace that individual? Do you have to hire in additional resources? Could be two or three other people from a temporary standpoint
Same
until you get
skills.
somebody else ramped up skill wise. So again, this capital is then used to maybe use that hiring to offset the loss of that skill set, and that allows the corporation or the business to continue functioning hopefully as it normally would.
So I think you gave a lot of great ideas, great tips to our Canadian estate planning audience today, and really appreciate your time and effort
My
that you
pleasure.
put in. And I think they got so many information today. And Canadian Estate Planning YouTube channel give you enough information to realize why you need to have life insurance for estate planning purpose. Please subscribe your our YouTube channel. You will get every week a new topic about estate planning and other related topic that we will discuss on it. And please subscribe it, and you could go www.canadianestateplanning.com, and you could uh, follow our social medias and be willing to give you some free tips in ongoing basis. Thanks a lot.
Thank you.